Good afternoon traders, and welcome to this live Axia stream where we're going to be looking at a trade that I executed in the Bund this morning. Now, the theme of this stream is the development of my strategy and my execution. Now, this falls off the back of, you trial certain things, you see how they work, you bring new things into your game, and you kind of review their implementation. I'm kind of going through a bit of a stage where over the Christmas period, I took a real step back and reviewed my performance throughout the year and the changes that I wanted to implement, and then started building that into my trading in the new year. And then as we've got through January, also had some feedback from some of the senior guys on the floor, our elite trader as well, as to some things that I can bring into my game to potentially improve my performance and where I might have potentially been hindering myself. So this is more going to be an example of how I've tried to implement some of these changes, and we're going to look at some of the areas that still need improvement and some of the areas that actually worked and I was quite successful in. But this is going to be far from this is the perfect trade type sort of stream. It's very much there's still some holes in this, and the whole point is to break it down and try to figure out where you can still refine this. With a view to kind of really refining your execution and your strategy so you can scale up going forward. So this is off the back of some news that came out overnight. Now, we've obviously got this coronavirus thing in play at the moment, and what's happened for the past 2 nights, there's been these big moves in the overnight session between, say, 11 p.m, 3 a.m. UK time, and we've kind of come in the morning and the markets have effectively gapped, and it's trying to piece together where the market wants to go using the structure that's been formed from the prior day session and from the gap as well. We're going to look at some of the correlations that were still in play that I used to my advantage, and really just kind of trying to layer things together, be it the technical landscape of the Bunds, the sentiment or overriding theme that's in play, and then the specific execution strategy that I applied. So very quickly, just touching on some of the things that I'm trying to kind of implement into my strategy, or some of the development features that I'm looking at. Now, the first is trade selection. Now, this sounds quite obvious. We obviously, we're trying to refine where we want to participate, but I've just been setting some pretty broad rules in play. For where I want to be involved is where there's an overlying theme, and when there is an overlying theme, I don't want to be fighting that too much. And what I mean by that is, say we're in a kind of risk-off sentiment throughout the session, I only want to be playing with that. I want to be, say, picking up, buying bonds or gold where possible, and then selling maybe, equities along with that. But really what I'm trying to say with this is trying to go with where the market is most comfortable with moving in that session, and then potentially overlay that with, from your higher time frame technical structure, which markets have been easiest to release in that direction. And this kind of layering of different things is what really can, it can add a lot of weight to your trades and really start to kind of bring your edge out if you're executing consistently within those. So then moving on to the execution now, something that I want to touch upon, I've presented many streams where, I execute or we look at my execution, and something that I'd found quite useful and quite successful over the course of last year was kind of getting in with as big size as I could and then scaling out quite aggressively. And I had a matter of success from this, as I was mainly using it on comments. That was the main area that I was applying this strategy. Now, where I've really failed to progress on my kind of technical trading, it's one of these things where you can find something that works for you in one scenario, but it can actually prohibit you from advancing in other scenarios. And what I'd found and what I discussed with various guys in the office was that although the strategy for getting in with big size and then scaling out aggressively works quite well on comments, where you kind of get you get some very quick feedback from the market as to whether your trade is working. It doesn't really apply so much with the technical trades, where you potentially need to give them more space, or correlation trades where, you know, it might take longer than you expect for the market you're trading to catch up in these in this kind of correlated move. And effectively what was happening was, although I was getting in with adequate size or trying to push my size with my initial entry, as I was going offside, I was kind of scaling out too aggressively. And it's one of those ones where you can think you're making progress by trading with bigger size, but if you're not executing, you know, in an identical manner with the bigger size as you did with the smaller size, then something's not quite right. So what I've effectively done is I've scaled down and taken my size back, but being more willing to kind of sit offside, work a position offside, as I'm going to talk about and we're going to see when we get to the ladders in a second. And really just a case of, you know, trying to hold a position where you're not going to panic if it flicks a few ticks against you, because these sort of rotations, they're so common in all the markets we trade now. And if you're panicking out or scaling out every time a trade moves against you, kind of just found it's diminishing my upside when the trade does finally go. Secondly, trade management. You know, this you know, plays into what I was just saying. Sometimes when you do just suddenly flick offside, you can use that to your opportunity to work the position in your advantage if the overall trade idea is still valid. And that's something we're going to see today. You know, I didn't panic too much. I might have been a little bit too aggressive with how I was distributing my clips as I was going more offside, but there were reasons for the trade to still, you know, be good. There was reasons for the idea to still be valid. And this is effectively what I'm really trying to work on is, you know, I want to take losers when I'm wrong. The worst thing is when you're taking losers when you're right, and effectively you're just getting squeezed out and you're just being weak participants in the market. So that's what everything that I'm going to talk about today ties into, and that really plays into this final thing, the commitment to the idea. And really that's what our best traders do. You know, so long as an idea is valid, they don't allow the short-term micro price action changes to scare them out of a trade, because to a large extent you've got to be aware that, you know, the ladder's not always going to show you everything you want to see in every second. And if you're so flippant with your execution where you're kind of panicking out anytime you see something you don't want to, it's going to scare you out of a lot of good trades. So what we're looking at here is the Bund weekly profile, and this is Monday and Tuesday. This is Monday, Tuesday, Wednesday, and this is where we opened this morning in the cash session, or the 7 to 8 session. So what you can see is we'd had an inside week last week, and we'd largely been trading out the middle of this kind of value area block. Now, what I'd experienced the prior day when we'd broken to the downside and then pulled back, selling was really not biting at all in the Bunds. Even when equities were rallying, you know, it was so hard to sell in the Bunds. And essentially I made my mind up then when, if something happened which was going to allow the equities to sell off, you know, that's when I really felt like there was going to not be an opportunity to buy Bunds to potentially break, you know, above this kind of weekly value area and targeting first port of call, the 69s. So coming in this morning where we'd gapped up effectively in the overnight session, you know, I'm really thinking, right, this trade is on. And narrowing down a little bit more, just having a quick look at what the equities have done. Equities have been up all week, and then we'd come in and they'd gap down. Now, I'm not going to go too much into the landscape of those, but effectively it plays into this risk-off scenario where equities are pushing higher, equities are pushing lower, and bonds, gold, yen, etc. are all pushing higher. So narrowing down a little bit more on the daily profile. So this is how I like to generally work it, is I have a higher time frame idea, and then you start to narrow your time frames. We'd effectively built this kind of P-shaped structure yesterday. We'd gapped up, 7 o'clock in the morning, we're trading here. And my thought process is, chances are we're going to have a stab down, and we could stab into this 28s and then bounce and go higher as this kind of, if this risk off sentiment continues. But the problem is we could also trade lower, and we could trade as low as this kind of 03s really, and the trade might still be valid. But where we came in, I'd kind of set 28s as an area that I wanted to buy. Now what we're going to see is me kind of rush into my execution a little bit on the open, and it just put me under a little bit of pressure where, you know, that small mistake of rushing that entry, it meant that I had to make some, you know, pretty clever not clever decisions, but, you know, I had to be pretty prudent with my execution afterwards to make sure that I wasn't putting myself under so much pressure, adding as this trade went against me, that I wouldn't be able to hold it if and when it did turn and take out the level that I was looking at, which was this 69s. And my assessment was that we could potentially even trade above those 69s. So, you know, I've got a green light to buy, but it's all now about picking and choosing your right moment to buy. So without talking too much about this, I kind of want to move to the ladders. Now, just so you've got your bearings on what we're looking at, this is the Bunds. You know, it's 5 to 8, so I haven't executed in anything yet. We've got gold here, we've got T-notes, we've got Spoo, and we've got yen here, so and also DAX as well. So as you can see, like DAX is the yen is pushing towards the highs. The Spoo, which has been so reluctant to go down over the past so far this week, is pushing the lows. Gold is kind of trading in the top half of its range, and the T-notes are pushing the highs as well. So as we're coming in, I'm kind of feeling like, right, if everything stays where it is, if the Bund should take this high, you know, and then it should potentially take the 69s. And I'm going to try and lean on these correlations to work this position once I get in. But what we're going to see is, you know, I've already identified the 28s as an area that I want to buy, but you also don't want to miss the trade. So it's one of those ones where when you do get in, you've got to be getting in with a commitment where you're going to manage this trade and you're going to stay in so long as these correlated markets are all pushing their extremes. And that's really the main thing that kept me in this trade and allowed it to turn, you know, a pretty vicious loser into an okay winner in the end. So I'm just going to play this forward, but what I'm going to do, I'm going to play it forward at 4 times the speed to start with. I might slow it down at some point. And I'm just going to jump forward to the cash open at 8 o'clock. Okay, so I got in a little bit before that. All right, so let's just start. So I think I kind of jumped the gun a little bit. You can see DAX, I think, started to take the low. Forgive me, this is the first time I've watched it back. So I kind of got one clip in and I'm thinking, right, I'm just going to have to manage this trade now. Hopefully it doesn't squeeze all the way down to 28s. But if it does, you know, so long as yen's pushing the high, Spoo's pushing the low, if gold starts taking the high, you know, I'm still in a good position that we should get some sort of risk off, translate into the Bunds to push it higher and potentially take out those 69s. So initial feeling is relatively good. You go a few ticks on side, but what we're going to see now is, you know, it pretty much straight line offers 20 ticks against me, and I'm buying more as it goes against me as well. Now I don't advocate blindly averaging, but when you're working a kind of zone and you've got other key kind of elements of that trade idea still in your favor, you know, sometimes you've just got to do it. But we're probably going to see me take a little bit too much heat than was warranted given the upside that I eventually take out of the trade. So it's just coming up to the cash open. As DAX starts to take the low, as we see here, I'm starting to think, right, this trade's quite good. If anything, I'm thinking about getting some more on. Yen's pushing the high. And really, it's a bit of a green light trade for me at this moment, apart from the fact that knowing what the Bund's like, it could trade down quite a bit lower. But just trying to not panic, trying to stay with the trade, give it some time. If it looks like it's getting really aggressive through the high of the day, then I can potentially start to add. But what we start to see here, and I'm going to slow this down now, and I'm going to take it just to half. So this is 2 times the speed now, is it just starts offering over straight line, but we've still got all the other risk correlated markets doing what they should be doing. I think DAX keeps taking the low and is like completely melting, and that's what keeps me in the trade. So I'm not panicking, thinking if anything, right, I wouldn't mind buying some more if DAX takes the low and yen takes the highs, and Spoo takes the low. Gold's about to push the high. Everything's looking all right, apart from the fact that my initial entry was pretty poor. So I think from recollection, I start working a little bit more in around here. And just start trying to work my average price down a bit and just stay with the trade so long as these correlated markets are pushing their extremes. But as you can see, it's just offering over, it hasn't come back a tick yet. And quite often they're quite a good place to add in, because if you get these fast kind of dislocation to the downside, the natural reaction is that it springs back a few ticks. And if you get something in at the bottom of that rotation, you can kind of work your average price as it comes back. So, I mean, it can be seen to be a little bit irresponsible what I'm doing, but it's kind of playing into this strategy that I'm working on, where I'm trying to be committed to the idea. So I've added another 3 lots in. I'm thinking, right, if this springs up, I'll get those 3 lots off. I would have worked my average price down to say, 40s. Everything else is still looking good, apart from the T-notes have pulled back from the high a little bit. That's the only thing that's concerning. But the fact that the Bunds failed to offer so much yesterday, for me, it's like, right, it's probably just going to make me work for this trade. So it's not particularly pleasant, puts you under quite a bit of discomfort, but these are the scenarios where I know from kind of, watching our elite trader, the worst thing you can do is puke, a 10, 15 tick straight line move against you, really, because chances are you're going to puke the low and then it's going to come back, especially when, your optimal entry is still kind of 10 ticks away. So really not enjoying it right now, but not panicking out of anything. And then this is where I probably get a little bit reckless, but it's one of those times where it's kind of justified in my mind because everything is still pointing towards the fact that Bunds should go up. So I chase this a little bit, get another 3 lots in at 38s. And really we've come down now, I think straight line pretty much from around 47 to 48. So we've already straight lined 10 ticks. But now I'm up to 9 lots. I'm probably putting myself under a bit too much pressure. I'm about 400 down on the trade. But this is where the final sort of squeeze comes. Unfortunately, I didn't panic out of it. I was still willing to buy at 28s, which I know that means I would have been wearing a pretty big loser by the time it got there. But it's just the equities have bounced a little bit. Yen's come off. But the Bunds still feel pretty low to me, in my opinion, at this time. So now I'm thinking like 28s. If I get in there and it straight lines through me, yeah, I'm going to wear a massive loser, a big loser for me. But if it straight lines 20 ticks in your face and doesn't give you a chance to get out while everything else is doing what you feel like it should be doing, they're the sort of losers that I'm not going to like, but I'm going to feel like, right, I was justified in taking the risk that I did take. So I can just see it sort of stalling here at 32s a little bit, and I'm still thinking about getting some more on. Now this isn't necessarily to hold all the way up to my target, but knowing that we've now gone 15, 16 ticks in a straight line, chances of us pulling back to this 39s or the 1 minute EMA, which we see at about 39s, in my eyes, it's pretty kind of good, especially as, Spoo's still hugging the low. If this trade was wrong, as soon as I see Spoo kind of bounce and start to trade higher, I'm out and I'm taking my loser in that situation. But really just trying to work the entry a little bit more, even willing to get a little bit more size in here. But obviously what I've done is, considering I only really was looking to run 3 lots to start with, I've put myself under, a fair bit of pressure, probably too much warranted, given the upside I was looking to take out this trade, you know, 25 ticks or so with a 3 lot, I've already kind of worn, you know, maybe 800 to a grand's worth of risk. But as it starts to do what I expected, I bounce after the straight line move. You know, at this point I'm thinking, right, now scale out, get to a reasonable size where, you know, I can hold that size and be comfortable, because the chances are it could still trade down to 28s. And I just don't want to see this squeeze all the way to 28s, me puke 28s, and then it kind of ramp to the high. And sometimes you've got to be a bit stubborn with these ideas, especially the way the Bund trades. It will always push you to the kind of point where you want to puke, and inevitably that's the low before it turns around. So I'm not advocating to anyone, you know, just keep averaging offside until, you know, your trade comes good. But sometimes you've got to be a little bit brave and take advantage of the fact that, you know, your understanding of how this market works is that it shouldn't hold a 20 tick straight line move without having, you know, at least a, you know, 20, 30, 40% pullback. So I've scaled out, you know, half of it. So I've now got my average price around 39s, and I'm starting to think, right, now I've got a little bit more of an average, manageable average price. Got out another 3 lots. I think it does rotate higher to around here. So I could have been a little bit braver, but considering the size of the zone that I'm trying to work, you know, I've got to have something that I can be willing to see another 10 ticks offside. And really 6 lots, I'd be struggled to buy again being 10 ticks offside with a 6 lot. We're seeing yen still pinned to the highs. Spoo's about to take the lows again. So really in my head I'm thinking, right, this is still good. Now, if we really start to go, maybe I'll throw in another clip back in. But I'm also aware that the Bund is just going to keep squeezing and keep squeezing until everyone's, you know, given up with the long, and then it's going to turn around. So I'm going to fast forward this a bit, because that squeeze was probably the most intense part of the trade. But again, kind of executing how I want to execute to an extent where I'm just not panicking. I'm still in the trade, you know, it's still on, it's still viable. I'm still willing to pick up some more in this sort of area, and even down to 28s if I get the opportunity. Yes, you could be thinking, right, well, if you had 12 lots on with your average price at 39s, surely it would have been better to get some out up here to kind of work your average price even better. That is true, but at that one point I was kind of, you know, nearly a grand down on the trade, 5 minutes into the day. Your kind of expectations of how brave you're going to be go out the window to some extent. You're just like, right, let's just not let this get absolutely crazy. And I'm glad I didn't, because it ends up trading down even more. But what we're going to see when we refer to the 5 minute is effectively it comes down and it does this in this sort of area. I think it trades 33s like 4 or 5 times. And I keep picking up around this kind of 33s and just taking a couple of ticks or 2 or 3 ticks out with what I've added, but maintaining that 3 lot core position. And that's really the kind of strategy that I want to implement. Whatever my first clip is, I never want to be depleting it below that. And that's because I'm trying to kind of develop a strategy which is more scalable. And really when you keep scaling out and being left with like 1 or 2 lots on, it's very hard to learn too much about what you're doing when you're in that sort of position, because you don't really have enough on to kind of get anything when you do finally get that big release. But we're seeing here, you know, it's gone against me. I've added again. And just working my entry lower, 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 so long as, you know, everything's not turned around too much. Granted, gold's pulled back from the high now, you know, Spoo's 3 or 4 handles from the low, but yen, everything's still broadly towards its extremes. If, as I said before, if Spoo started rallying crazy now, then I'd probably just have to be like, right, I gave it my best shot, but, you know, this didn't work. But I'm actually looking at buying again around this 33, 34s area. Just feels like we're doing some volume here. And I think I get left on the bid a few times in this trade from recollection. But, you know, just being quite prudent, scaling out, of a little bit as it comes back. You know, great if this pops through. Well, I've got 5 lots on, 6 lots on, and I get to scale a little bit more out of 41s. That's, you know, that's great. But without seeing all the other markets taking their extremes, kind of not expecting the Bunds to turn around anytime soon. DAX starting to make its way towards the lows again, so is the Spoo. Gold's starting to drift higher, yen's starting to drift higher. So now I'm starting to think, right, maybe this is the point where this trade comes good. And there's generally always one final squeeze the second that you feel that the trade's coming good. And again, the way it's trading, it's just not really taking out prices. I'm getting left, you know, on the bid and offer, both sides quite a bit, which can be quite frustrating. But now, just feel like the energy is potentially picking up a little bit more. But, you know, I'll be honest, I wasn't particularly enjoying the trade. But as soon as I got myself down to kind of manageable size to stay in, you can kind of commit to it a little bit more, and you can still think, right, if we trade all the way back down to 28s, I'm still going to look to buy there. And in fact, that might be, you know, that's where I initially wanted to be a buyer. You know, that could be the optimum entry for this trade. Spoo's starting to kind of drift towards the lows still. I think DAX has a real run in a second. So DAX about to take the lows again. And you can see I'm convincing myself just by putting a stop below the low that, right, you're in this trade, you're committed to it, you're going to work this until you see it right or wrong one way or another, which is kind of the mentality that I feel like I need to apply, where I'm too quick to kind of jump out of trades because, oh, they don't quite feel right. That happens so often. You just end up scratching or, you know, taking loads of risk and then scratching a trade before it finally comes good. DAX taking the lows. But you can see how much time I've now been in the trade, you know, 40 minutes. But this is something that I see our elite trader do, not the way I'm executing necessarily, but, you know, he really stays with it. And then when it does turn, you know, he goes full beans and kind of maximizes the trade. And that's the thing, that's where, you know, he kind of sets himself aside with, you know, the amount of pain he's willing to stomach before the trade comes good. That's kind of part of what allows him to get on these really good moves, because by the time this does rotate and start going higher, you've kind of missed the trade if you're not already in it. It's the nature of these moves. It will start really slowly grinding and then everything will come in and it will have a final flush. And that's normally where you're panicking, trying to buy a high as it's going through, and it's inevitably the end of the move. So got to kind of think a little bit back to front with how you want to execute with these trades, so that you're not doing just what everyone else is doing, which is waiting, and then buying in this kind of 50s area, and then essentially getting squeezed and the risk reward is not really viable in the trade anymore. You know, I've still got 30 ticks upside to this trade if it does play out as I expect. So you can kind of convince yourself that it's warranted, you know, working the entry in this sort of zone. But there's, I mean, this was a 3-hour trade in the end, so I think I'm going to have to jump through a little bit. But you can see I've worked my average price down to 35s now. And I think that's the last bit of averaging I choose to do. I think I try getting filled at maybe 31s, 32s, and I miss it. You can see at this point, DAX is still kind of pushing towards the lows, Spoo's pinned to the lows, and Bund's like pretty much towards the low of the IB, the initial balance. So there's no real reason for this to be stuck in this area. You know, there's still room in this trade for it to come good, and it's just about holding on really and surviving until all of the sellers give up and the market can just rotate higher, which it does inevitably do. Okay, so at this point, you know, I'm not really expecting it to come back and trade through my average price again now. You know, we're starting to see play out what you expected to see play out. Spoo's still pushing through the lows, as is DAX. You know, gold's pinned to the highs. Really, you're looking that at a bare minimum, the high probability trade now is for this to take the highs. But knowing that those 69s are there, you know, they're still in play. I still want to see the trade get up there and go. And actually what we will see is a big kind of risk off flow come into the market, and the Spoo just starts emptying out, as does the DAX, and the bonds finally release and take off to the upside. And something that I've also been trying to work on is just holding these trades to your target, or till you at least proved wrong that it's not going to reach your target, because it's quite easy at this point to be like, oh right, I've finally gone 10 ticks on side, let's get out, and all that's happened is you've taken a load of risk and only taken 10 ticks out of the market. So I'm quite diligent in staying in this trade until the flow does finally come through, which I'd quite like to show you, but I'm not sure where it is. Okay, here we go, I think it's about now. So you can see this is where DAX is really emptying out, as is the Spoo, and the Bunds just have that final release. And usually I'd be executing in this area, I'd be thinking, all right, let's buy here. And really it just hasn't proved that fruitful, because you inevitably get the one which pulls all the way back down, you know, 10, 15 ticks, and your upside is only 10 ticks or so. But we get a real big cross-market risk-off flow that comes in. And then what we see, I'm not sure if we've got time for it, but we're going to see, you know, after the move's done, it finishes with a pop, as we see quite often in all these sort of trades. And then gold had like a big kind of spike reversal. I think Spoo did the same. It had a spike reversal and then tried to double bottom. And that's when I kind of feel like, right, I give up on the trade, and I start scaling out, I think, 58, 62s, and then my last one I get out is around 54s. But as you can see, it takes a lot longer than you'd like it to take. And then finally, when it does go, it's like the easiest thing that you've ever seen. But you know, it's all the hard work's done in that zone between kind of 30s and 40s, and then you kind of just want to set yourself. And for me, be in a position where I'm like, right, I'm not going to mess this trade up now. I'm not going to buy into this high, because it's so easy to be like, oh, let's add some more, and it's probably going to take 69s, and then it squeezes 10 ticks, and you just kill a good trade. So that's what I'm trying to work on, working your size and working your entry, and then just leaving it and letting it run and taking the risk on the chin if it goes against you, because it's a bit more scalable than what I've been doing in the past, where I'd kind of buy 6 lots 41s, maybe scale out of a couple, and then it goes offside. I work out of everything, and then I've got a 1 lot on when it finally ends up going. But we're going to see there's a daily high in gold as well, so I thought, right, as long as gold's pushing higher, you know, if it takes that level, I'm probably quite good. I'm thinking I'm going to start working out above my 69s, but if I see anything different before it gets there, and really, you know, tying that mainly to what the equities are doing, that's where I'll kind of choose to get out. If the equities kind of V-reverse, as I said before, I just don't want to be fighting that, because we've just seen equities be picked up so much in the past kind of couple of weeks that inevitably they're going to bounce higher, as they ended up doing throughout the rest of today. I think as we're talking now, they're pretty much pinned to the all-time highs. But we see this final little pop in the gold. And I think that's when I'll get out of the rest of it. So you can see now, Spoo's got a level down here, 49s. I think it pops that, and gold pops the high, and then everything just instantly reverses, and that's when I start working myself out this trade. So you can see gold's popped the high and starts coming back really quick. Doesn't look to test that 05s again. Spoo does the same, it pops this low with the blue line at 49s and then bounces quite aggressively, and that's when I effectively go into scale out mode at that point. I'm like, right, all the kind of things that were keeping me in this trade have now flipped. Let's not watch this all the way back, and actually this, from when I start getting in, it trades down another 40, 50 ticks. So I'm lucky that I was relatively prudent not to get too greedy in the trade, because you can end up throwing away a good trade that you kind of worked on or worked at quite a bit. So just fast forward this a bit. But you can see from this point, it just starts going against. And I think I wait for one bounce and I get out my last bit around 54s. So just want to cover just broadly what we've seen. So you can see my fills here where I was holding, I think it was like a 3-hour trade in the end. So at some point you've got to kind of address the bits that are wrong in your game. But the problem is that you can build up some really like sunken deep bad habits when you're trading, where you do the wrong thing so many times that it just kind of becomes second nature to do it. And it's really difficult to kind of break yourself out of that. So although, you know, what's evident from what we've watched is, you know, I probably was too aggressive adding offside, but granted, I didn't expect it to straight line that far against me with all the other correlated markets pushing their extremes. That to me just gave me more opportunity to buy, but what I could have probably been doing is building a bigger position off the back of that, so that, you know, my upside was still getting stretched with, in comparison to the amount of risk that I was taking. So I probably did take too much risk given the amount of upside that I took out the trade. But you can see here how long I had to sit through. I think that was pretty much an hour in that zone of just chopping before it finally went. But again, some good things to take away are that, you know, you pay attention to what the markets are doing, and if your idea is still in play, but don't just hang on to that indefinitely once it looks like the move's finished. To get a kind of 20, 30 tick move out the Bund at the moment, you know, these through the range moves have been quite prevalent in the past few days. You know, that's what, once it's done, you know, take everything off the table and reset and look for the next trade, because I quite easily could have watched this all the way back throughout the course of the afternoon and turned what, you know, was a winner into a big loser again, really. But really just the key things that I want to take away from that are, you know, not panicking when you're offside, trying to be objective. Everything else is still pushing the extremes. Right, let's stay with the trade, and not scaling out too quickly. I mean, that's the main thing. When I start scaling out in this area, this area, and this area, you know, you're really damaging your edge and your risk reward as you do that over a number of trades. You know, your upside is just shrinking, and it's all just because you don't have the bottle just to sit on the trade and let it play out. Granted, there are times it could have come back and then turned over and gone, but if we'd started trading down through the lows, then, you know, I was thinking to myself as this was playing out, you know, what do I want to do? The fact of the matter is, you know, you only want to be proved wrong, you know, once or twice. You don't want to be so resilient that whatever the market shows you, you're just going to keep taking the same trade. So, you know, there's some good things to take away from it, but really just trying to kind of work on the key things of executing how I want to, and just being diligent with how you do that. But really the thing that I think failed me most in this trade was just rushing my entry a little bit in the first place. Had I have not bought there, I would have been in a much stronger position to start buying in this zone as I was planning on doing. But, you know, you don't know what's going to happen. Some days the market can just kind of race off and IB break and take out your levels. So, you know, given what everything else was doing, I still think there was reason to trade how I did, but certainly some things to improve upon there. So that's all I've got for this trade. You know, I'll open it out to you guys if you've got anything to ask.